All right, ladies and gentlemen, we are moving swiftly now into topic 3 of 4 for today. And this is where we shift the conversation from policy to practice. And we begin to ask the question, what does it take to enable thriving youth entrepreneurship? The session is presented in partnership with Edu Invest, powered by WesGro. We continue our holding pattern, and that is we start off with a sponsor introduction. Thereafter, that's followed by a panel, but we all bring ourselves into the conversation through the poll before we continue with the discussion. And so to lead us in the sponsor introduction, it gives me great pleasure to invite the Chief Marketing and Innovation Officer at WesGro. And this is on a talk titled Education, Investment, and the Case for Catalytic Capital, and which, of course, is presented in partnership with Edu Invest, powered by WesGro. Please help me welcome Russell Bruton to the front. Oh, so I just got a note to say it's a video instead, so Russell's not in person. We can still give Russell a round of applause in absentia. Thank you so much.
Good afternoon, ladies and gentlemen. My name is Russell Bruton. I'm the Chief Marketing and Strategic Partnerships Officer at WesGro, and it is a pleasure for WesGro to be a supporter and partner for this important engagement today. Just for some context, WesGro is the official tourism, trade and investment promotion agency for Cape Town and the Western Cape. And one of our strategic focus areas is on attracting investment into priority sectors. We also have a focus on replicating our catalytic delivery model so that we can have the biggest possible impact in the Western Cape and for South Africa. One of those catalytic projects is Edu Invest. Edu Invest aims to attract private sector investment into the education sector in order to improve access for learners. It also helps to facilitate corporate social investment into the sector, trying to make it as easy as possible for those corporates who want to give back to do so in the province. And thirdly, it looks to develop private sector partnerships, because we know that in order to attract investment into the province, we need to collaborate with and work together with the private sector. So Edu Invest is proudly here today representing WesGro, representing the Western Cape. And we look forward to engaging with you, to learning about your projects and your initiatives, and to find out more about how we can help support you in landing your investment in Cape Town and the Western Cape.
Thank you very much, Mr. Russell Bruton. Short and sharp and to the point, but more than anything else, setting us up for a conversation on education, and in particular in the investment into education and the case for catalytic capital. And so joining me now to lead us in a panel discussion, I'm going to invite the panelists. I'm going to invite Wendy Viljoen, who's from Edu Invest, powered by WesGro. So Wendy is a senior manager for Edu Invest, powered by WesGro. She's an education specialist and brings over 17 years of experience in learning theory and methodology, educational strategy and technology into the conversation. Her expertise focuses on creating accessible, innovative learning experiences. Wendy, let's give you a big round of applause. There she is. Let's give her a round of applause. And Tafatwa, you might not need to sit down anymore. Please join us. Tafatwa Nyagano is the Chief Financial Officer at the African Venture Philanthropy Alliance. He's a finance and accounting professional who is deeply passionate about Pan-African development. Let's give Tafatwa a big round of applause. Thank you. Elmarie Cunha is with us. She's the Head of Transformation and Strategic Partnerships at UXI Empowered. She is a learning, transformation, and strategic partnerships leader with over 20 years of experience in building capability and education initiatives. And then last but not least in this conversation, we're joined by Jana Duploy. She's Chief Executive Officer at Apex Education. Let's give Jana a big round of applause. Thank you. And this is an organization, ladies and gentlemen, that aims to make high-quality education accessible to children from low-income communities. Now, again, as we get ready to participate in the poll before we transition into the conversation, I'm going to ask us to turn to our devices as we look at that question. The question this afternoon at this point is, where is catalytic capital needed most right now to unlock education investment at scale? Where is it needed most right now to unlock where's catalytic capital needed right now to unlock education investment at scale? So we know we've got a couple of options, and I'd love to see that coming up on my comfort monitor as well, technical team. But the options there for us are, is it early childhood development? And in particular, infrastructure in that regard? Is it school infrastructure? Is it teacher development and instructional support that we're looking for? Is it blended learning, like EdTech-enabled delivery? Is it student finance and affordability mechanisms? Are we talking about data, measurement and outcomes verification? Or is it about building a stronger pipeline of investable education operators? So I'm going to give you 30 seconds to a minute just to participate in that poll. I'm going to grab my device, which I've seen is on the side of the table as well, so that I can keep track of that. And as per usual, thank you very much, sir. We will turn to the outcomes of the poll and integrate that into our conversation. Allow me to also remind all of us that if you'd like to participate through the questions, you've got to go to that Ask a Question green bar at the bottom of your device, and that's going to allow you to ask, to integrate your voice into the conversation. So there we are. We have an immediate read, but as of now, we've got about 46, 48, or 50 people who've participated. I'm going to let that run in the background while we get into the conversation. So, Wendy, I'm going to invite you to kick us off, because if we take a look at your work, which is largely around facilitating education investment,
yes,
where do you see the biggest blockages between good intentions and money actually flowing into education? And I'm keen to hear, what do you think needs to shift in order to unlock that blockage that you observe?
Yeah. Thank you so much. I think you are tasked with asking all the loaded questions today, so that's great. So my role is to basically bridge the gap between high impact education interventions and the capital they need to scale. Now, given that, I mean, you asked where the biggest blockages are, and my experience is that it's not the lack of will. A lot of people in this room, if you ask them if education is important, will agree. A lot of people will say, yes, we need to do more in that space. So it's not a lack of will. But what I do find is that there is this blockage around perceived risk of investing in education.
Okay.
And not just the perceived risk, but also the outcomes of what this could mean. And so there's that natural push and pull. And if you put that into perspective, if you invest in education, it's a long game. So it's a long wait before you can actually see the impact in the work that you are doing or the implementation partner. You navigate very complex regulatory hurdles throughout the way, because the biggest custodian in education is, of course, the departments that is operating there. So you have to, at some point or at some level, engage. And sometimes that regulatory environment also offers a blockage. And if you bring that all together, that basically puts education, because it's so complex, there's such a lot of moving parts, you have to wait long to report on actual outcomes, then there's a risk for corporates. And so when, in my line of work through Edu Invest, we often talk about the business of investing in education. Sure. And the reason for that is because we are past moving in the line or in the direction where education is just a social concern. Let's do good. But from a corporate point of view, there's so many things strategically that needs to be put in place when a decision is made to invest in education. So why don't we flip the tables and ensure that the opportunities that exist for investment is not only investment ready, but is investor friendly. And so when we look at the biggest blockages there, it is around how do we de-risk education interventions for businesses?
So, Wendy, I'm going to be difficult because I think what you've landed for us is just so important. I moderate a lot of conversations around investment, and in particular, let's say, investment in large-scale infrastructure.
Yes.
So at a national level, we talk about investment in transport, in bridges, and so on and so forth. And the language you use is the language they use there.
Yes.
That it's the project pipeline, and we have to make sure that everything is investment ready, and that the environment to invest is friendly. But it's almost nobody's actually naming the risk that you're naming now. And I want to test that I'm understanding that the risk actually sits in the regulatory domain.
So yes, a big part of that is in that domain, because it dictates how we go about all of this. And I think the other big risk that we too seldomly talk about is who's the beneficiary of this? And that's the learner. That's the students, that's the youth. And a lot of the times decisions are being made for them, around them, but not including them.
Yeah.
And that's also a risk. We heard in the beginning about for the community, by the community, and the same can be said about education. And so, yes, the regulatory part is fickle. I've been in this for a while, but I still learn every day. And it's finding the gaps so that we can operate in that space. But for me, how we mitigate some of that, and I hate to use the word PPP because it's got negative connotations and people have got their own experiences, but it's through strategic collaboration. That's the word I want to use. So if you are corporately investing in education, you can't do that by yourself.
Sure.
If you are MPO and you're working within the education space, you're not doing that alone by yourself.
Yeah.
And at the end of the day, how we mitigate the risk is through strategic collaboration and partnerships.
And I suppose we do. I mean, the entire morning is actually really centered around that very question, to say, how do we actually work together better so that this will that you say is in abundance actually can translate into investable opportunities.
Yes.
And the kind of outcomes that we're looking for. Tafatwa, let me bring you in because you bring the lens of catalytic capital. It's another sexy word that's a phrase that we've been using a lot more, especially in the development finance world. But perhaps just help us to understand, Tafatwa, how do you know that catalytic capital is genuinely attracting and unlocking other capital, or is it just replacing existing capital? What is this distinction between the two?
Thank you. So I think maybe just to take a step back, we recently launched an AI tool that tracks impact investment on the continent. Not only is it globally, but on the continent, the investments in education and healthcare are attracting the least capital. And for a continent that's bringing to life about 4 million kids per month, I think South Africa is 1 million kids per year, to have such little investment in education and in healthcare, it defies logic. Now, we also know that the private markets have so much capital. So you can imagine if pension funds were to invest in education. I have my own theory that says Absa is investing because they've realized if they don't invest in education or in entrepreneurship, no one will be banking in the next few years. So now, this is where catalytic capital comes into play. Catalytic capital, by its nature, it's meant to unlock private capital coming into this space. Now, I think we judge catalytic capital from additionality. Does catalytic capital help investments go where in themselves they wouldn't go? I think earlier we heard that I think it's Gauteng and Western Cape that are attracting the most investments. Now, how do we get capital to move into other provinces?
Yeah.
Right. So I think by its nature, it's meant to be temporary and transformative. So when you say it's not only substitutive, we're saying if someone started an educational enterprise in Senton, I don't think they'll struggle to attract capital. But if they went to Alex can they attract the same capital? Now, catalytic capital needs to come in and make sure that those sort of investments are still as attractive. I think once we get the corporate, the private capital providers to look at investment in education as good business and not just an impact first element, that will unlock the true value of catalytic capital.
And I think that's exactly where my follow-up question was going to be, and that is, how easy or difficult is the conversation of getting, whether it's pension funds or other, whether it's financial DFIs as an example, to step in now that the catalytic capital is in place, to step in and actually make the large investments that we're looking for? Is education a sexy asset to sell? Is it an investable asset? How difficult or easy is that conversation?
So currently it's not an easy conversation because there are governance elements, the structural elements that we still need to address. But I think there is sort of gradual understanding. We can even pin it on a capacity sort of basis. So at AVPA, what we've also done is we're trying to address the capacity gap. You'd find we've launched a catalytic capital training. How do we get the people that are sitting in these offices to understand the role of philanthropy, for example? Because philanthropists would have given grants to most of educational enterprises that are playing within the education space. So how do we repurpose some of the grants that we're currently giving to entrepreneurs so that they're more catalytic in nature? Right. So I think the conversations are starting to happen, which is a good first step, if you ask me.
Tafasa, thank you so much. And I must say, I'm still reeling from that statement you made at the beginning to say the investment in health and education is comparatively low. I think the narrative that the ordinary person hears on the street is the over-investment in education, and yet you don't see the outcomes of that. And to hear that actually that may not be the case is actually quite interesting, and perhaps just speaks to a need for a re-education of society around how are we really taking a bet on education versus just speaking it rather than actually doing an interrogation of actually even national budgets, even before we come to corporate involvement. Almarie, let me bring you into the conversation as an investor in education. And in particular, the question I want to bring to you is, I think this investment conversation can sound very theoretical and sort of inaccessible. What makes education investable practically? What are the things that you're looking for, that you're wanting to tick off for you to say, this is an education project or program or initiative that is investable, this is what we're looking for? So that's the first part of it. But I'm equally interested in what are the things when present as an investor make you back away?
Thank you. I think the first thing that I want to say is that education is never a soft investment. And I think that is something that we all need to understand, and maybe that's been a misconception in the past. It's not a soft investment, it's an economic infrastructure. And if we start looking at our investment in education in that lens, it gives us another way of looking at why I would invest and what would a good investment look like. So for me, there's three things that is important to me when I look at an investment, and I call it the 3 Ps.
Okay.
So it is, there must be sufficient proof that the model works, that the model can deliver, that it's going to lead to employment, that it's going to lead to enterprise. So there's evidence that needs to be given to each of these investment models that I want to invest in. There must be a very clear pathway for my investment. So if I look at a learner, it's not about access to the opportunity. It is about what is the learner journey, how sustainable is that learner journey, and how am I going to ensure that that learner is not just passing, but also competent and ready to enter. So the investment should not just be giving a bursary funding, because that is not an investment. That is just giving capital to somebody. But if we see it from a different perspective and we look at the whole pathway, so when we look at an investment, I want to see clear milestones, clear outcomes, and what is the expectation at the end. And then the last one, which is my favorite, and I've got some colleagues and ex-colleagues in the room, and maybe it's just the nature of me, but that is protection. So what is the protection of my investment? And that protection is always underpinned by governance. So if I want to invest, and when we talk about investment in education, like Wendy said, it's slow, it's a lot, it's large. So how do I protect that? And we can only do that by good governance.
Yeah.
So if we look at our investment, we want to look at everything from the data, the systems, the reporting, what is the student report, what is the employer linkage.
Yeah.
So all of those things gives me a view of what this investment would look like. So when we put something in front of an investor, we need to show them not just the good intent. We need to move beyond that because we're talking about an investment. So capital or money understands structure. So when I want somebody to invest, I need to give them the why, but I also need to tell them, how is this going to benefit me? Because at the end of the day, you are still a funder and you still want that investment to be long-standing and sustainable.
So the second part of the question, would it be correct for me to then assume that in the absence of proof, in the absence of a visible pathway that is over and above access, in the absence of protection, so the absence of governance, that those three things would make you step away from an education deal immediately?
It would definitely raise red flags. And sometimes it just needs more probing. Sometimes people don't always understand when they approach investors. How do I? So it's not to say that it's not there, but it's not clear. So I think maybe the clarity of what is it that I'm bringing to the table, what is the mutual expectations? And I think sometimes that is also the issue, not just that it's a lot of intent but not structure. Sometimes we just don't put it. When we want people to invest, we're not clear about what they can expect. So it could be any one of those, and it can be red flags. I think one should always investigate a little bit deeper, just to see if there's not maybe a mismatch between the presentation and the actual model. So that's also the other thing that I think. And I think when we link it back to our catalytic investment, what I love about that is that we then strengthen with that type of investment, this system, the student, the support. So when we talk about catalytic investment, I think it absolutely bridges that gap, and it sort of creates a middle ground where we can link all of this to make sure that the good intent has got a very good outcome.
So that's going to make the outcome of that poll very interesting for you as well, Elmarie, as you look at where we think catalytic capital should be flowing and where you see the bridges of opportunity for catalytic capital to close so that the deal becomes sellable to the investor community.
Correct. So if we think about the first question you talked about, and I said maybe it's red flags.
Yeah.
Shall we not look at this and say it's a very good institution? It's a very good purpose. The community is ready, but there's a red flag. Why don't we fill that gap or make the red flag a green flag by investing in the right things to support and sustain that project over the long time?
So, Yana, as we bring you into the conversation now, I think it's quite important because as an education operator, you really bring the voice of the kind of partnerships that you actually need in order to meet your own ambition, which is one, making sure you're able to give quality education, but also to continue to do that at an affordable rate. What type of partnerships and what type of capital do you think education operators most appreciate that would allow them to do the job of meeting those dual outcomes?
I always say to other nonprofits, be very careful who you take money from, because that might be the one decision that you end up regretting most. I think for us in how we look at funding partnerships is exactly in that word partnership. And so we try to link up with organizations that have a shared value system. So all of our main funders currently are successful business people or organizations who have, with basically the foundations of business principles, looked at this philanthropic endeavor. And so I think there's a shared value system around excellence.
Okay.
There's a shared value system around believing that education is going to significantly improve South Africa, that is going to contribute economically. There's a shared belief that the education system in its current shape is not delivering those outcomes. Mm-hmm. And there's a shared belief that just sharpening the pencils is not going to change that.
Yeah.
And so I think you need to find people and align yourself with people that really believe in that. But that doesn't mean that you let go of the accountability or the outcomes that you need to achieve or the returns that you need to deliver. It just means that there's an agreement into what those are. And I think once you're aligned on that values level, the conversation shifts significantly. Because now we're all trying to achieve the same thing. And some people bring money, and some people bring skills, and some work operationally, and some works in governance. But we're all working towards the same objective.
So this idea of almost rallying around a common purpose has been the key theme throughout the day. And you're bringing it back, Yana, this idea that there's a shared value system that you're looking for. You're looking for shared belief, a shared conviction that education is important and that we should be investing in it. I want to follow up with a similar question I gave to Almarie, because your opening statement said, be careful who you take money from. Mm-hmm. So I want to go there.
Okay.
I want to go there. Who do you not take money from? And the reason I asked is to say, what are the flags for you that would say to you, this is not, outside of we don't share the same values, because we've established that, but this is not the kind of partnership that is going to allow me to deliver on my mandate of quality and affordability. What makes you step back?
Look, so everyone here will know, all funders have their own mandate, right?
Yeah.
And so some people's mandate is maybe to work wide, but maybe only lift the tide with 2%. Mm. Okay, so for instance, that's not what we do. Some people will philosophically have an objection towards technology in schools.
Yes.
We lean very heavily on technology. So I think those real fundamental questions are the ones that you have to understand. We believe heavily in the use of data and analytics in schools. Very few schools share that belief, for instance. So I think, I always say, Apex is not for everyone, and that's okay. Mm. And I think in my conversations with funders, if I understand that the funding mandate will be, they like the Apex model, but they want to implement it maybe in a different way or in a different place, then I think it's better that we just say no and rather say, is there a different way that we can help each other?
Mm. Sure. So we may be adding another P to Almarie's P's, because we have proof, pathways, and protection, but maybe there's a philosophy,
yes,
P, that needs to be in place, because if that philosophy, there isn't alignment in that philosophy, Yana's not taking that funding and would probably want to go look elsewhere. I think it's an interesting way that we've opened the conversation. So maybe let's go back to the poll. Let's just remind ourselves where we're at in terms of the collective thinking online and in the room about where we think catalytic capital is needed most right now, if it is to unlock education investment, but specifically to do that at scale. So this is what the numbers, I'll read them out because it might be small for my panelists, but the big standout number here is 32%, where the vast majority of the audience say it's actually early childhood development infrastructure. So if we put catalytic capital towards infrastructure and ECD, that's where we're going to realize the greatest impact. That's at 32%. At 27% is teacher development and instructional support. Then at 15%, we're saying building a stronger pipeline of investable education operators. And I'd love to hear what you think about that, Yana, as you reflect on that as well. At 9%, we're saying, before I get to 9, let me go to 12%, which is general school infrastructure. So without an emphasis on ECD, just general school infrastructure. At 9%, it's blended learning approaches. So EdTech-enabled delivery as an example. And then this last two, which are, for me, probably just the same, 2% and 1% is the same thing. At 2%, we're saying student finance and affordability mechanisms. Almarie, you'll have a view on that, because what I was hearing you say is we've moved beyond just access, funding for the sake of access. And just for the sake of affordability, we need to be looking at the journey more holistically. And then now at 2%, which is really interesting for me, data, measurement, and outcomes verification at only 2%. Now, if we're not putting money towards the data, the measurement, and the outcome, and Al-Marie wants proof. I mean, that for me feels like a massive disconnect in the conversation. So let me then try my best to literally balance the voices on my knee, on my second device, and the questions that I still have. And let me see if I can bring the audience voice in a little bit more into this conversation. All right. So, Wendy, let's come back to you. So you made a comment and you said you don't want to use the term public-private partnerships glibly because different people have had different experiences with PPPs. But the question that we had here for you is, can PPPs help to reduce the risk in education investment? And if that is a positive outcome and PPPs are able to do that, what needs to be true of that PPP arrangement for it to translate into a real risk reduction?
Yes, so many P's on this, panel, right? Yes, so the reason I made the distinguishment is, and because of the past connotation of PPPs, right? Many people, when you throw PPP out there, they're thinking MOU with a department in some way, shape, or form. But it really stretches beyond that. And to answer your question around how can it reduce the risk and just the roles that we each play, it really comes down to what Al-Marie and Jana were saying, is the right kind of partners for the right goal, a shared goal and vision, and what role they play in that equation. Yeah. So when you look at how a partnership can de-risk the investment, there's a few things. If you're working with a public entity, definitely around policy certainty.
Yeah.
Is policy, regulation, procedures hindering the progress we can make, or is it supporting?
Yeah.
And I'll leave that question there, because that tells you exactly about some of the things that needs to move and shift when we're talking about partnerships.
Sure.
The other thing is, and I think you all had some version of it, is risk sharing.
Yeah.
Right? In other words, there is a mutual ownership that we take within this partnership. And so if it's a school operator, their role is to ensure that quality is then given for each learner. If it's an investor, then there's a capital responsibility that they have, making sure X gets to where it needs to go for the purpose it needs to get. So there is that risk sharing and also co-allocation. So we might not all contribute financially, but we are contributing in certain aspects. So it's financial and non-financial, allocations and contributions. So that co-ownership then is a way that a partnership really can strengthen and get it closer to that common goal that we want to reach. Then the last one, and it's sad that to see measurement at the bottom, and that's the proof that, remember when I started, I said the business of investing in education. What evidence do we have that what we are investing in is doing what it's supposed to do?
Right.
It's getting the impact. And so how do we de-risk it? We make sure that there are ways in which we can measure the outcomes. If we're saying it's quality education, that one is a bit tongue-in-cheek, because what is quality education?
Yeah.
But there are certain things that we can measure. So let's make sure that there are things put in place that we can account for, which is to my last point, keeping us accountable. That we can account for, and when we're not delivering, how do we keep each other accountable for that? How do we move past that blocker? So that's how we can de-risk it. And you might ask then, okay, if that is how we're going to de-risk it, what kind of roles are we each playing? And I would say then, you stick to what your strength is, you stick to what your organization does well. So if it is a government entity, then policy and regulation, right? Making sure that we are in an enabling environment. That the infrastructure is there to allow us to establish, to implement, but also to grow in scale. And service delivery, what do we need in order for this to work? And if you're an investor, the same applies to you. Do we have the capital? And now I'm saying capital because do we have the right funding for this particular venture, right? Not all capital or funding is the same. Or can be used within education in the same way. Innovation, are we open to pivoting? Are we open to change? And are we open to redirect as things grow and change? And lastly, and I think this one speaks to how we get further together, is efficiency. Are we working with what we have to the fullest of that extent? And then can we grow from there? So that's how I would look at it.
So Wendy, I'm going to put some words in your mouth because I'm going to say what I heard as an unsaid, just having listened to you. In your first response, you highlighted regulation as one of the things that often becomes a blockage. And as I listen to you speaking about what are some of the things that make PPPs work, you speak about the various partners bringing their various strengths into the game. And public sector partners, for example, bringing their regulatory or policy capability into the room. And the unsaid, which I'm hearing, is that sometimes if the thing that actually sours PPPs is when we take our strengths and we weaponize them against each other. And so the public sector partner weaponizes regulation. The funder or investor weaponizes the fact that they've got they hold the strings to the purse to the purse that actually makes this possible or not possible. So I think there's a conversation to be had to say, how do we bring those, what needs to be true for the strengths of the different partners in PPP to translate into strengths and not to become risks? Because I think the line listening to you is actually very fine. Absolutely. And it can go either way. Tafato, let me bring you in. Technical team, can I just have the poll up again? I just want to check something with Tafato. I like evidence and data so that I don't get into trouble. Tafato, there's the list. I think you can see it from there. This is what the audience is saying. This is where catalytic capital is most needed right now. When you think about the proposals and the requests for catalytic capital in education, what are the requests and the proposals for? Is the money for data measurement and outcomes, or are we finding more proposals for early childhood development infrastructure? I want to get a sense between to what extent is this picture an accurate reflection of the reality of the request and the demand for catalytic capital today?
Thank you. So it feels like an exam because the answers are here. And I'm happy data measurement and outcomes is going up. It started off as 1%. Yes. I was worried. And if you didn't select data measurement and outcomes verification, please sign up for an IMM course with AVPA in June. And to answer you on this one, there isn't a single element where I think it's more in the connection of these elements where catalytic capital is being attracted. But I should say data measurement and outcomes verification is the largest single blind spot, if I can call it that.
Okay.
Because, investment in education is considered risky. It's long-term. The ones that require it probably can't afford it. Right now, how do investors price the risk if we don't have the data? How does the government draft the right contracts if they don't have the data? So I think what we have put at 4% here, if we can change that sort of distribution, we could potentially have investors coming into this space and looking at this as a not less risky space, but at least have the data to inform some of their decisions.
But are you then also saying, again, I'm putting words in your mouth, are you also now saying that perhaps it's traditional capital that should be looking at ECD infrastructure, and perhaps it's traditional capital that should be looking at teacher development? The sweet spot for catalytic capital probably sits in areas like data measurement and outcomes. How do you differentiate what is for catalytic capital and what is for traditional capital?
So we're not, I'll say we're not, we don't have a shortage of ideas within the education space.
Sure.
What we are lacking is capital to scale. So even within the early childhood development, traditional capital would come in, but there's a missing middle. What happens when, the social entrepreneur wants to scale? If they need an investment between 2 to 20 million, banks would probably consider it as risky. Grants would look at it as, traditional capital would look at it as too much. That's where catalytic capital needs to come in and help scale those models. And I think, as we had earlier, we can fund elements such as governance, data systems. So that it's an interlinkage amongst all these where there's a spot where traditional capital will end.
Yes.
So that addressing that missing middle, I think, remains the gap that catalytic capital needs to.
It's the missing middle. As you've said it, it is about addressing that missing middle. So I think that's fantastic. I'm going to move on to Elmarie. And Elmarie, I'm going to try my best to land these two questions really quickly. I can't remember who on the panel raised the fact that the Western Cape and Gauteng actually attract the most, that was Tafatwa. So you're going to, Elmarie, you'll take this one nonetheless. The question is from Gqibelo. And Gqibelo says, what is it about the Western Cape and Gauteng that attracts the most investment? And why are we not seeking to understand this and this trend in particular? Because we all know that the greatest need is not in those provinces. And so maybe to paraphrase is just to say, what is it about what's happening in the Western Cape and Gauteng that will attract investors much more than where in the Eastern Cape or even KZN, where the need is so much greater?
Okay, that's a tough one for me.
That's Gqibelo, that's
but
not
no,
me.
Happy, no, for me to answer. I would like to give my opinion
Sure.
around that.
Sure.
Because I'm not that familiar with the Western Cape, but I can give you my opinion about what I think is happening. If we think about, and we just spoke about traditional capital. So if we invest in a traditional way, we invest in a bursary, we invest in certain things, that's our traditional. If we then look at the universities and institutions that we do find the strong ones in Gauteng and the strong ones in the Western Cape. So if we think about where the capital flows, is it possible, and I'm asking, that the capital is flowing to institutions where people feel the investment is safe, there's enough numbers, there's enough support, the system are there, so that's the one thing. And I think the other thing that we can do to counter this is to say, do we always just have to invest in tertiary education or post-school? Do we have to invest that in higher education? And I think if we're going to start switching into artisanal training, more technical training, we are then moving outside of that, and we can go back into rural areas where artisanal technical training follows the economic paths that are available in the rural areas. And I'm thinking that is maybe what is lacking. It was always the funding of bursaries, the funding of learnerships and those. And we do find them clustered maybe a lot in Gauteng and Western Cape. And I do hope and foresee in the future that if we start redirecting our capital into more technical, artisanal type of education, we can move beyond that and move it back into rural areas. Because if we look at artisanal training or we look at technical training, those are one of the best predictors of being an entrepreneur and creating new jobs. Because if I'm technical, artisanally inclined, or I have those qualifications, I stay in my area, I would be able to start my own business. Maybe sometimes better than if I studied in a tertiary place where I need an organization to absorb me to do my law or my finance. Much easier if I studied new solar technologies or something else. So that would be my opinion, but also maybe a solution, is to redirect capital into where we need the infrastructure, the capital to go to.
I think that's a very solid contribution, and I'm going to move on from there. I've got 9 minutes. I want to go to Yana, and I had quite a few questions for you, Wendy, so I might come back with one more. Yana, the question that I have for you here relates to this idea of operators, and perhaps you can correct me if I've got it in, if I'm misunderstanding this, that operators or education operators would probably have a bias towards more stable sources of funding so that they can forward plan, whether it's forward planning around their infrastructure or their growth and so on. And oftentimes when we talk about innovative capital and catalytic capital, that might not be as long-term and as stable as an operator might require. How do you balance that? How do you make sure that you are able to benefit from short bursts of capital that might be available, whilst at the same time having a capital, a backer that allows you to really think about how you sustain yourself into the long term?
I'm learning a lot of new words today. There's now traditional capital, catalytic capital, solid capital.
Innovative capital.
I've never heard of something like predictable capital. So, look, I think for me, innovation, if you do innovation for the sake of innovating, then of course, then that becomes a distraction. But I think if you're very clear about what your business model is, and you're saying that you innovate towards achieving that goal. So at Apex, we build and we run schools, grade R to 12. And so, I mean, it was interesting for me also on the poll to see one of the, I think the second highest category was teacher training, which I think is a very traditional thing that people spend on.
Yeah.
And it's a really important thing to spend on. But I think that's really rooted in the belief that education outcomes is going to shift if we better equip our teachers. Now, we're in a room of business people, so I just want to share some numbers. In high school, the state spends about, I mean, in the Western Cape, the state spends about 20,000 Rand per child per year in, let's say, the average no-fee, low-fee school. Those of you who've had a child in high school, let's say in the past 5 years or currently, I'm wondering what you spend if you believe that your child got a quality high school education, but I'm pretty sure it's not 20,000. So let's say it's 60,000, and my guess is that for many of you that number will even be higher. So what we're saying is the state has 20, and we know what those outcomes are. Quality costs 60, and we know that that's unattainable. Innovation is the gap in the middle.
Yeah.
And so, for instance, the model that we've come up with is in high school, we say that we're re-looking this role of the teacher to say we can teach 100 students simultaneously in a class. But so I think if you just stick to the traditional belief that we need to train more teachers, we need to train more teachers, we need to train more teachers, but the reality is even the best trained teacher is not going to deliver exceptional outcomes in a classroom that's overcrowded, where toilets don't flush and lights don't work. So I think when we think about these different funding models, the question is, you know, for me, it's almost irrelevant to say, like, do you spend on innovation? Do you spend on traditional capital? I mean, you need to run your business. Our organization needs to be financially sustainable, and that's my job, to make sure that between the different income streams, of which some are sporadic, of which some are school fees, of which some are government subsidies, but that we manage that cash flow in a way to ensure that we're financially sustainable. And I think that's the responsibility of the business when they do pitch for funding, so that they can show that they can achieve that.
Yeah, I think that's a great way of explaining that balance and what you need to think about, and that perhaps maybe we are getting caught up in the terms of the different types of financing instruments that are available. And at the end of the day, money is money is money is money, and we need to make sure that we have it in abundance, or at least enough to keep the lights on while we're building towards the future. So I would have wanted to come back with more questions. I've only got 5 minutes on the clock, so I'm going to give you a final billboard question, because our next speaker is online and we don't want to keep them waiting. I think they're joining us from the UK, if I'm not mistaken. And so the way I'd like to close this one is a little bit different. I'm going to ask the team to put back the poll, and I'm going to ask each of you to choose one of these that you think, actually, if we allocated catalytic capital to this, I think that this has the highest chance of unlocking education investment at scale. So you get to choose your one, and you get to make a sentence to backing it up, and that's how we're going to close it off. I think it's a lot easier than a billboard, so you're getting off very lightly. So Wendy, I'll start off with you. What would you put at number one?
If I had to choose,
Yes.
I would do the building a stronger pipeline of investable. I often say the issue is that it's not about whether there's funding, there's enough money available, circulating. It is the opportunity ready for that investment, and can it create sustainability within education?
Yeah. Is the opportunity ready for the investment, and does it have the capacity to deliver on the sustainable promise? So that would be building a stronger pipeline. That's for Wendy. Tafatwa, should I guess data?
Yes, you may. I'm happy to back it up. Data. The good pipeline would need to prove that it's good pipeline. How do they do it? They need to measure data. I would go data even a step further to say this is the only way we're going to prove that investment in education is good business.
Yeah.
It's not impact first. We're not looking at it as a corporate good. It's actually good business. So let's have the data, I think. Let's have the measurement and the outcomes verification. When the investors come, we are able to show them the proof that this actually works. If you put your money here, this is what you're going to get. Yes, it's risky. It's deemed risky. So
we're adding another P. Show me the profit.
So I'll be part of the 4%. But
so there we go. So philosophy, profit, proof, pathways, and protection. Almarie, what would you put at the top of the chart?
So I'm going to speak with my heart.
Yes.
Okay. And I'm going to say that the student finance and affordability mechanism, for me, as a mother that had 3 children that needed to finish university, the affordability, the pressure that we have in the systems, in our communities, and us personally, for me, that is something that is really close to my heart. And I think maybe if we can bring it back to the theme of our of today, it's really about the voices and the vision and the values. And I think we must always, although we spoke a lot about different types of capital, I think we must always remember that who is this capital meant to serve?
Yeah.
This capital is meant to serve a learner, a child. So affordability is absolutely critical. And even though we know that we are supporting somebody that might not have the affordability, I also think that we must not compromise on our quality and the dignity that we give in our education. So that for me is important. And that's why the affordability mechanism, just because it's not affordable, it cannot not be quality, and it cannot take away the dignity of somebody that could not afford it.
Yeah.
So that is my hard answer. And I think we must just, in our vision, understand that some things must just last longer than the investment. And I think that's why I chose that one, because it speaks a little bit to my heart.
Almarie, thank you very much. I think it speaks to a lot of hearts in the room, because I think many of us, with or without children, some of us have gone through education with lots of difficulty and struggle. So, and watch parents struggle to get ourselves and siblings through that system. So thank you very much for that. Yana, what would you put at the top of your chart?
So the bit that I understand about catalytic capital is the acknowledgement that it's limited. So for instance, I once saw this really nice infographic that shows the size of the bubble of philanthropic spend, the total philanthropic spend in South Africa versus the total bubble of the public sector spend.
Yes.
And the bubble of philanthropy, even together, and even though it's a lot, it's like very small, and public sector is really big. And in South Africa, I think about 80% of our children are in public schools nationally. So if you say you want to impact education, the question is how can you spend the little bubble in the way that's going to have the biggest impact across the country? And so I think in that, I'm going to base my decision on everything. I mean, if you think about business, we say that if you find the right leader or the right entrepreneur that they make it happen. And so I'm going to go with Wendy and say, if you find the right operator, they will take care of everything else on that list. So that's going to be my vote.
Thank you very much. So small bubbles to become big bubbles need catalytic capital. That's one of the things that I've taken away. But Jana, thank you very much. Can I give a round of applause to my panel? Thank you so very much. Thank you, thank you, thank you, thank you.